Hi guys, it's Arsh Ellahi, and in today's session we're going to be talking about bridging finance and whether you should be utilising this as part of your investment strategy. So before we do that, I want to say a quick hello to all subscribers and all watchers really of the channel. I know that the channel is growing weekly and I just want to say thank you for that really. And if you haven't already done so, please press subscribe and the notification bell so that it notifies you every time I release a new video. So let's get straight into it. I'm going to give you a scenario now. So just imagine that you go to an auction house and you go off and you see a property, it's in need of modernisation. And when you buy something through an auction, chances are that you're going to have to exchange immediately and then complete within 28 days. Now, there's two things wrong with this at the moment. First thing is that if the property is in need of modernisation, if it's got no kitchen, it's got no bathroom, or it's got a load of damp, lots of companies, like lots of mortgage lenders, like your HBOS Group, like your Shawbrooks, like your Kent Reliances, etc., they won't really lend on that style of property. More importantly, they won't jump through the hoops to complete the transaction within 28 days. So what are the options? Now, for me personally, I like using bridging companies. So bridging companies, lots are out there. I'm going to give a personal preference. I use Together Money, don't mind saying that. And Together Money for me have been really good for me in the past. I've seen a property in auction and I've gone to my representative, who's Scott, and I say, Scott, here's a property, who was in this auction, I've just bought it or I've just exchanged on it, I need the money within 28 days. Now with bridging companies, they've got the ability to deliver within that time frame. They know this is what they specialise in. So when I look at something like this, I've got to make sure that I've got the funds to be able to deliver, because if I don't complete within 28 days, they then put the 10-day notice of default notice on me, and next thing you know, I'm in a heap of trouble. So I need to know that I've got the funding in place. So that's why it's great for you to build this relationship with the bridging companies before you go to an auction, or even get what I would consider a DIP, a decision in principle, or an agreement in principle, AIP, before you, so that you've got that spending power. So, bridging companies, why do I like them? They're a short-term finance. So when I say that, it's generally between 1 to 24 months, no longer than 24 months. No bridging company likes to be in a property longer than 24 months. And if they do, they start hitting you with some serious fees. So I'm going to come on to that in a second. What I really like about bridging companies is the fact that they will lend on pretty much most style of properties. They won't lend as much as a buy-to-let lender, so they won't lend as much as like Shawbrook or Kent Reliance, etc. But they will lend up to circa around 70%. You can get 75%, but it's rare. What they will try to do is trying to hedge their bet and lend responsibly between 65 to 70%. I on average get around 70% because they see me as a responsible borrower, because I've done multiple transactions with them, and I know lots of people that have. So with bridging finance, like I said, for between 1 to 24 months, and what they want to know is what's your exit plan. And with an exit plan, we're talking, are you buying a property to buy, refurb and sell? Or are you literally buy, refurb and then refinance? The one thing I would say to you is that work with the end in mind, because if you're going to a broker and they're going to deal with the bridging finance for you, always say to them as well that I want you to arrange a bridging finance, but also make sure that you've got a buy-to-let lender to get me out of the transaction within 6 to 12 months thereafter. There are lots of pros and cons for using bridging companies. First pros is the speed. They can get you a decision in principle or an agreement in principle within circa 7 to 14 days. You can actually draw down on that loan within 14 days. But what they will want a suitable level of security. So they will do two things. They'll either do a desktop valuation, which means that they don't physically need to go into the property if there's good comparables on the street, or they will actually physically go and visit the property like they would with a normal mortgage survey. That's where they'll issue the report and say, well, here's what we think. But they need to agree to make sure that you're going to be able to pay that money back responsibly within the time frame. And so It is good because if I was buying a property as a normal buy-to-let, and I wanted to refinance it, just imagine that I was buying a property below market value and I wanted to refinance it 6 months later to get all my money back out. There's no point me going on a buy-to-let because most buy-to-lets have got, a certain period of around 2 years where they try and fix you in, which means that if I try to refinance within 6 months, I'm going to get hit with lots of redemption penalties. Now, with bridging companies, there are no redemption penalties because they know that you're going to try and redeem within that period of between 6 to 12 months. That's the kind of average that people try and get in and out of. And bridging companies normally charge around 1% a month. You can get lots cheaper than 1%, but the average is around 1%. My average is circa around between 0.65 and 0.7%. But that's because I've got a history with them as well. So the more you lend, the more you pay back, the more responsible you become, the more comfortable they become with you. So it's always good to do a deal with them. They like projects where they know they're going to get their money back out on the back end. So if you can show them that I'm buying it here for 100 grand, I'm going to put 20 grand into the property and it's going to be worth circa 150, 160 on the back end of it, then naturally they can see that the value, if you can show them comparables to show that it's worth 160 thereafter, that's the way that they'll say, yeah, okay, I can see the value. And hopefully the valuation that they have conducted, whether it be desktop or physical valuation, that will, if you've got those figures in the valuation as well, you're in a real win-win scenario. One thing I would say is a negative of bridging finance is that they are a more expensive level of finance. But one thing I say, it's short-term pain for long-term gain. Because if you look at it in two ways, if you were to buy the property initially with a buy-to-let, when you come to refinance it in 6 months to get your money back out, you're going to get hit with a redemption penalty. When you calculate what the redemption penalty is, it's pretty much the same as what you would have got with a bridging loan anyway. So I don't understand why you wouldn't have gone with a bridging loan from the outset and have that flexibility as to when you refinance and what your outcome is. More importantly, bridging finance will loan on loads of different styles of properties. So it will look at repossessions, it will look at properties below market value. Some buy-to-let lenders won't look at properties which are below market value because they're thinking that you're taking advantage of someone in their hour of need. Bridging companies don't really take that into consideration. All they want to know is how much is it worth, how much you're paying for it, and we're going to lend on the purchase price, not the market value initially. You're then going to refinance against the open market value 6 months later. So there's just a little tip for you. So again, they'll look at repossessions, they'll look at properties below market value, they'll look at properties which are in need of modernisation, they'll look at development sites, they'll look at commercial properties. So they look at a whole meridian style of properties. So that's definitely something worth considering. I utilise bridging loans quite a few times a year, and because it allows me to get in, I make sure that I've got my exit plan in place. So I've got my lender, my preferred lender, I don't mind saying is Lloyd's, because we've got quite a good relationship with those guys. So I go in with not auction finance, there were auction finance previously. I go in with Together Money, I refinance out on Lloyd's, and it works extremely well. And this is the way that I've built up a quite substantial portfolio by going in, adding value, refinancing. I did another video previously about how to add value and, more importantly, how to utilise refinance quite effectively to build a portfolio. So go and watch the video. So other negatives I would say about bridging finance, that yes, it's more expensive. You've just got to look at the fee structure as well. So you need to understand they charge a fee to get in, they charge a fee to exit, and then you just got to have a look at what the monthly payments are. You can either do it two ways, where you pay the monthly payment as you would like a normal mortgage, or you can roll up all the interest and either pay it at the front, which means that it reduces the loan amount, or you can pay it at the end when you're exiting. So these are things that you have to take into consideration, especially when you're doing bridging, because these will, I said in a previous video, you've got to know your numbers. If you don't calculate the numbers correctly, the fees can be quite hefty. if you don't use the correct solicitor or you don't use the solicitor that's on their panel, they have to allocate another solicitor to deal with this case. That can be quite expensive. So you can add another couple of £1,000s on for another solicitor. So you need to make sure that the solicitors are sitting on their panel. That's a negative. But again, if it allows you to get the deal done as opposed to not do the deal, I don't understand why you wouldn't do it. You know, I'm a big fan of saying if the deal's good enough, the money will find itself, and the money generally is in a lot of bridging companies. I know there's hundreds of bridging companies out there. Start making those relationships, because this is the way that you're going to progress in your property journey. So guys, hopefully that's just a quick, short, sharp, almost like a snapshot of what bridging companies do. Go out and research, and more importantly, go and speak to some of the brokers out there. Go and speak to some of the bridging companies. There are bridging companies that you can approach direct where you don't need brokers. Sorry, brokers, but that's a fact. On that note, guys, if you like the video, please like, share, and subscribe. More importantly, if you like more free education like this, have you subscribed to my podcast, which I release every Tuesday? It's called The Property Rebel. So it's released every Tuesday at 6 a.m. And on there, we give away hints and tips as to how you can build a property portfolio, but more importantly, the things that I've done in my portfolio, which have allowed me to get to where I am today. As well as that, if you want to connect with me on social media, you can do by finding me on Facebook, LinkedIn, Twitter, and Instagram under the handles of Arsh Ellahi. And then finally, if you haven't already done so, have you downloaded the Property Investor app? It's the UK's first property investment platform, which showcases all kinds of deals all over the UK. And you can buy these using bridging finance as well. That's just a little plug. So if you haven't already done so, you can go to the app. You can go to the App Store, which is on your smartphone, by searching Property Investor. Or you can go to our website and type in propertyinvestorapp.co.uk, and you'll have all 200 plus deals in the palm of your hand within minutes. So there we have it, guys. As always, I hope you found this video of use, and I wish you and your families to be all safe and well, and I look forward to speaking to you all very soon. Thank you, and bye-bye.